This market is super confusing. Oh man, so markets are buoyant despite a horror show of a jobs figure. We just saw yesterday that we had 339,000 new payrolls created in May. Another sign that this labor market is super hot. But then why is it that Bitcoin managed to bounce yesterday up 1.6%? Why is it that the traditional markets were booming? You had the Dow Jones up 2% yesterday, S&P up 1.5%, 1% on the Nasdaq. You can also see that the markets have priced in a pause. 75% have now flipped back again. This is such a yo-yo market right now. Back again to say that we're going to get a pause. How are they doing this on the back of what seems like some really negative data? If you remember last week, we got a hotter than expected PCE figure. We then had a hot jobs figure this week, right? Job openings, too many jobs open. We then had a hot ADP figure followed by a hot non-farm payrolls. So what is it the markets are looking at right now? We're going to break that down because it's very specific and we got to get into the weeds to understand why this market is finding the positives out of this data. Smash up likes. Don't forget to subscribe here on a Saturday. If you appreciate these updates, make sure you smash up likes. Make sure you let me know that you appreciate these timely updates and check out the links in the description to support the channel, which includes your ability to buy my TA course, ijaz.uk/TA, as well as all the tools and softwares like my trading checklist and all these other bits and pieces, links in the description. We're sitting here and yesterday we managed to bounce, right? If I jump down to the 4-hourly chart, you'll see we managed to bounce here. And the strength has been caused by the markets focusing on something very specific. So when the non-farm payrolls came out, this was expected to come in at 190,000. This bar was supposed to be like really small here. That's 217. So we're going to be about like here. Instead, it comes in at 339,000. Too many jobs created. Labor market is too hot. Remember, the whole thing that the Fed wants to do is soften the labor market, right? Because the notion is that the labor market softens inflation, which they want to bring down to 2%, which is still in that 4% region. So that came in really hot. But this is what the markets are focused on, which most people are not talking about. The unemployment rate was expected to come in at 3.5. It came in at 3.7. So there is more unemployment being created than expected. So this is showing, I know it sounds horrible for the economy, but in terms of what Jerome Powell's trying to do, he needs to create unemployment because that's going to bring wages down. It's going to bring inflation down. People spend less when obviously net unemployment starts to rise. So that one came in positive. Then you want to look at the average hourly earnings. And if you look at this year over year, the consensus was for it to come in at 4.4. It's come down to 4.3. So again, further sign that this is coming down to the downside, the wage growth. So the market decided to focus on these two figures, which are directly linked to inflation, and they're taking it as a positive that it's okay. We're not going to be driven into a recession just yet because the labor market is showing good resilience. But at the same time, we're getting the desired effects we want, which could signal that it's just a bit of a lag and inflation will come down. And that's led the market to go, you know what? We change our mind again. Because remember, the market initially gone, yeah, we're going to go for a pause. We're going to go for a pause. Last week, they then flipped and majority of the market was like, oh, we're going to have 25 basis points. We're going to have 25 basis points. Now it's flipped again to say, okay, we're going to have a pause. And that's what the market is expecting. Now, the FOMC meeting is just over 11 days away. The day before the FOMC meeting on June the 13th, Jerome Powell will get the final piece of data he's going to be armed with. And that is going to be the latest CPI inflation reading. Okay, no doubt he's going to see that probably a couple of days earlier so he can make his decision. But if we get a pause, markets are pricing that in. That's going to provide a little bit of positivity in this market. If we, however, get another 25 base points, which Jerome Powell has room to do, guys, I think the data is very clear that we're not driving ourselves into a recession. If he wants to come out and say, you know what, I'm going to finish this job on inflation, I'm going to do another 25 base points, this market is going to throw up a little bit unless this changes over the next 2 weeks. And we'll monitor this closely over the next 2 weeks to see what position do we go into that meeting in. Because as it stands, if we had the FOMC meeting today and Jerome Powell did 25 base points, we would get wrecked because the majority of the market is pricing into the side that we're going to get a pause. Very, very important. The other thing which is obviously helping markets is the fact that we had positive debt ceiling, right? The debt ceiling's been done. US avoids recession. We covered it off in yesterday's video. Good stuff. We can move away from some of that fear. And so now we can start to look at this chart. We can probably start zooming out and start looking into kind of this daily chart here and saying, are we now ready to start mounting an attack on some of these key levels again? And I think the answer is yes. I think if we take off some of these drawings here, we just look at it pure here like this, we were sitting around this level during this debt ceiling issue. We've managed to hold some strength. We've created a higher low, which is good. Look at this low here. We've managed to create a higher low now. Can we break above 28.5 where my cursor is here? Can we then get above 30,000? And can we get above 31? That's the aim of the game right now here on Bitcoin. Now, the only risks to the downside that we have is, of course, focusing on our EMA ribbon. Now, as you can see, we've managed to give ourselves some breathing room. This is where we're sitting right now, and the top of the EMA ribbon sits at just around here at 26,200. So we've got a little bit of room here to pull back into our EMA ribbon if we need to, but so far so good. It looks like the wick from last week happens to be the test of our EMA ribbon. Now we can leave some of that kind of negativity behind us in terms of the debt ceiling, in terms of worries about inflation, and can we now build a positive week next week here to the upside? Now, another thing we're going to want to look at here is the dollar index. Of course, we want the dollar index to be moving to the downside. Now, interestingly, we're looking set to close our weekly candle on Bitcoin red. At the same time, we've had a red week on dollar index. So it's a bit of a decoupling week this week where Bitcoin just said, we're not too excited to run to have a green week, but we're not going to have a horrible red week either. Similarly, for the dollar index, we're saying we're not going to have a crazy green week here moving to the upside, but we're also not losing our EMA ribbon either. So you see in the dollar index here, if I zoom in down to the 4-hourly chart, you can see exactly what happened here on Friday before the close. The last 3 4-hourly candles, the dollar index quickly rallied. It was in a very bad position here. I mean, if you look at this here on the daily chart, it was coming right into its daily EMA ribbon, and then it rallied quite a nice way up to the upside before the close for the dollar index. So the dollar index posted a positive day on Friday despite everything that went on in terms of how the market was deciphering the jobs data. Now, I'm going to put my neck on the line here and say that bar any crazy outside macroeconomic changes, I think that could have been our pullback. Remember, we were saying when we had a big move here from the bottom side, when we were sitting at these levels close to 15,500, we moved into our EMA ribbon, we consolidate, and then we had this big move from 19,500 all the way up to 31. I said, guys, we need a pullback. This isn't healthy. We need to come into our EMA ribbon. I think we've just had that. And I think now we're ready for our next leg to the upside. The question is going to be, on this next leg, do we run out of steam? Will we just get to 29 and then collapse again? Will we just get to 30, lose steam and come back again? Will we get there, get rejected, and create a double top pattern at 31, where we get rejected once here at 31, and we go create another candle, let's say here in a couple of weeks' time, and we get rejected from 31 again? That's going to be the question, but I think we're ready for our next leg to go test to see how much strength is being held by the bulls here, because you can see they've reset the RSI. The RSI, when we hit 31 on this weekly chart here, was touching that overbought territory. Now it's given itself some breathing room. So this pullback was perfectly healthy. Now we need to see, okay, are we ready to go and move to the upside and break through 31? Or do we need to come lower? Do we need to test 25,200 again? Do we need to come into our EMA ribbon, maybe ride it for a little while? Maybe even be in sideways territory. I know that doesn't sound fun, guys. Maybe Bitcoin for the next couple of months just wants to go down below the EMA ribbon, above the EMA ribbon, below the EMA ribbon, above, and just be in some sideways territory for 6 months, right? That's the other option we could be playing here. Now, for the bullish scenario to play through, which is this lovely cup and handle pattern, which I've been monitoring. Let me show you that, guys. This is the cup and handle pattern, which I'm really hoping plays out. And in order for that to happen, we've got to show the strength, right? We've got to show the strength. We've got to get out of this downward channel here, break to the upside, and break above 30 and 31. If we can clear 31, guys, the gap is so powerful to the upside that I think it can happen really quickly. So for all those people being impatient in the market, you've just sat during this consolidation period. And you've seen here on Bitcoin how quickly these moves happen. Look at this move here, 28%. Look at this candlestick here, 21%, right? If you're out of the market on this candle, 21%, plus this candle here, 11%, and this candle here, 28%, you're missing 70% moves in 3 weekly candles because you're trying to be in the market and out the market and in the market and out the market, right? There is nothing to stop Bitcoin from just having a crazy move here up to the upside, getting it to 33,000 in one push in one powerful week. Right? And that is the reason I'm in this market. I would not want to be out of this market right now. When I look back at what we've been through in 2022, when I look at how high inflation was, when I look at how bad the economy was, when I look at the Russia-Ukraine issues, when I look at FTX collapse and all the crypto-specific pain points we've been through, I look at it now and say, this is a positive. Crypto's managed to weather that storm. And then it's weathered all the Operation Choke Point storm of this year as well. Right? All the efforts by the SEC, the US governments, Western governments to try and make it difficult for crypto, they've managed to navigate it. All those troubles, they've continued and they're moving stronger. And now we've got the launch of FDUSD, another stablecoin because the US wanted to shut down BUSD, right? Just coming up with solutions to keep crypto alive and to keep it moving. So really exciting times now here for the crypto markets. Let me know how you're navigating this. Are you out in the market? Are you in the market? Let me know in the comments. Are you DCAing? What is your game plan? Right now, I'm not personally DCAing at 27,000. If we do get a pullback into 26, I will be looking to top up some more. Thanks for watching. Hope you enjoy this weekly update. If you appreciate it, smash up likes. Don't forget to subscribe. Make sure you go watch his trading video, guys. Probably one of the most important videos I posted all week, maybe longer. Go watch that video. In that video, I give you the nitty-gritty tools, templates, exactly how I day traded, learned from over a decade in traditional finance. Thanks for watching, guys, and I'll see you in the next one.